Okay, on your screen right now is still that weekly chart, weekly bar chart of the All Ordinaries Index that I've been showing you for the last few weeks, as you guys know that have been listening to these or watching these recordings on a weekly basis. I'm actually using my computer in my recording studio, which is what I use for our students all the time, and that live online seminar, I suppose, if you want to call it, live online session that I want to do, will be using this computer and obviously using exactly what you're seeing on your screen. So we'll be chatting around, you'll be emailing, messaging me questions, etc., asking me to look at stocks, that sort of stuff. So if you are really interested in getting onto that, just hit the subscribe button and hit the like button as well. Obviously, that's another thing you need to do. As far as the All Ordinaries Index is concerned, it really is doing exactly what we're expecting it to do. Generally, it will fall. If for those of you who have been watching these recordings and or looking at some of my articles, that sort of stuff, there's a ton of articles on our website. It really is simple. The market does move down sort of 7-8%-ish, sometimes 8 to 12% on a yearly basis, but every so often it'll actually do sort of, instead of that sort of 7, 8, 9% move on a yearly basis, the move will get down to somewhere between 8 to 15%, and that's really all the All Ordinaries Index is doing. I mean, we saw this big move down through here, and you can see there's 20% move down here, down into February 2016. So why would we be panicking right now? Normal stuff. If we go back just a little bit, and you can see another big move down to 24.4% back into 2011, but it had different moves. Where's my little thing over here? So this move here back in 2013, there's another 11.84% move. It's pretty normal what we're seeing. So this is where the media will really, I suppose, for want of a better way of saying it, suck you into making emotional decisions, and people do that all the time. And I read comments, not just people commenting on these videos, but on our Facebook page, and I do get emails from different people. And the thing is that a lot of comments come from a place of ignorance. And I'm not trying to be rude to anybody, but a lot of people think they understand the market, but in reality they don't. And a lot of comments are made just through sheer lack of education and lack of knowledge of how markets work. And people sometimes will say to me, when they speak to me on the phone, oh well, your course is expensive, and my answer to that is ignorance is more expensive. And only last week we had somebody chatting to us who'd lost over $30,000 on the marketplace because they just didn't know how to trade properly. I've got people in the last week that have lost 20, 30, 40% on their portfolio that's cost them $10,000, $15,000 in the last week or so. It's right across the board. So to me, it's about understanding. I did get a comment last week that I will make a minor mention of. Somebody said you can't time the market, and I 100% dispute that. That's exactly what we do. As a trader, that's exactly my job. As a fund manager, that's also my job, because people who come to us asking us to manage their portfolio, they want me to predict what the future is going to be, and picking stocks that are good, that are going up. And it depends on your definition of timing the market. Some people deem timing the market is picking the exact bottom to the day and the price, and the exact top to the top in terms of the day and the price of the exact top. That's not timing the market. That's just pure speculation, and that is so hard to do. It's not funny. You can do it, but it takes a hell of a lot of work and a hell of a lot of effort. That's not timing the market. Timing the market is about picking and buying in when the market is low, and it's highly likely to move up, and getting out when the market is high and it's highly likely to move down. And it's not necessarily trying to bottom pick or top pick. It's picking safe entry and exit points, but getting that timing right. Fundamental analysis is really great for picking what to buy. It'll give you good valued companies, but it will never, ever tell you when to buy something. It doesn't do that. It just tells you what's undervalued and likely to rise, and what's overvalued and likely to fall. Technical analysis is what I teach, and that will tell you when. And when you're looking at when to buy and when to sell, that's timing the market to me. So getting onto this, obviously this chart of the All Ordinaries Index, just to say that we've had a couple of stocks from some people wanting us to have a look at the stocks. I'll get to those in a second. But looking at right now, we're seeing our market, the Australian market had a high of, as you can see there, 6481.3 in August, and it's fallen down. Now it's fallen through this 25 to that 38.2% level. Now, if you're watching these videos, you'll know that I talk about the market coming down into these sorts of levels. If I do put my little tool on here, you can see now that as of close last Friday, down 11.14%, just normal territory at this point in time. My ultimate, if it does continue to fall, which I don't necessarily think it will, but if it does continue to fall, it will. And I'll say that it will find support at or above this level at 5621. It won't go below that. Zero chance in my mind right now that it will go below that. But I always need to be prepared as a trader that I'm going to be wrong in my assumption, and then flexible in that in making decisions. Because as the market unfolds, often when I was on Sky Channel and people say, "What do you think of this stock?" and I'd say, "Well, that's my thoughts today. Tomorrow I might change because I'll get more information, because as every day moves on, I get more information. But as of today, I don't think it's possible to fall below 5621. And that's not too much more in percentage terms. We're only talking another 2%. So it's not too much. I'm thinking our market's finding some support, and I won't go into why. There's a whole lot of stuff that'll probably spin your head that I do that I'm not going to show you here. But I think the market is having its low right now, and it'll probably move up within, either if it's not this week, it'll be next week, maybe the week after, but it will start to move up towards Christmas time. Whether we break this high of 6481 before Christmas, it will depend on how strong the move is up through here, but I think it'll give it a good shake. If it doesn't break through, it'll get closer to it in terms of that, and that means some good opportunities on some very, very stocks. But today is not time to panic, and this is where a lot of people, if you're fearful of the market right now, as I mentioned last week, then you don't know enough. If you're fearful about what your stocks are going to do, then you don't have a plan. If you don't have a plan, then you're more gambling than investing and trading, and that may hit a few nerves for some people. And I don't mean to be rude to anybody, but I have traders, or people tell me they're traders all the time, and when I ask them how to articulate their trading strategy and a plan, they don't really have one. In my mind, a trader is a professional. It's somebody who knows why they're buying, why they're selling, and how to manage everything right through. And they do that with confidence. So if you're not confident in the market, if you don't know, if you're worried about stocks that you own, and if you're not sure what to do or how to exit, then in my book, on a scale of 1 to 10, if you measure me as a 10 on a trader scale, you're about a 2 or a 3. And that means that you're going to be inconsistent in your trading results, and you're going to put more stress in your life. And to me, less stress by having some knowledge, and you'll make far more money, have less trades, and you'll be more under control. I mean, that's a real benefit of getting a good education. Now, today's stocks I'm going to go into. Let me scroll down to some of these today's stocks. I'm actually going to look at AMP because some people have actually asked me about AMP. There was one comment on the forum, and I know for a little while there, people are just in the last month or so, people have just been bagging AMP out, and obviously for good reason, because it is falling. But these are the stocks that I get really excited about, and people go, "Why?" I mean, it fell out of bed last week. It really did fall out of bed. If I go to this 1 weekly bar, you can see here, if I put it onto the open and to the close, you can see there's a 26% fall in a week. It still gets me excited, because simply is, if it falls, it's a good stock. AMP is a good stock. It's a very, very old stock in Australia, and as it gets cheaper, the more it falls, the more the probability is the fall's going to stop and start to rise again. And just to get back up to where it was last week, if I just put this tool back on it again, let me get rid of the other one. Get rid of that, because if you lose 10%, you have to make 11% to break even. But if you lose, here we go. So just to get back up to where it opened last week, there's 35%, or nearly 36%. So I'm not saying it's going to do that this week, but I'd suggest it would probably bounce. What I've talked about a couple of times on these things, looking at this is a monthly chart now of AMP, and if you look at this, I've just put a tool on its all-time high, and you can see they're at $30.06 now. it is exceedingly rare, and I mean exceedingly rare, that a stock will fall more than 90% of its all-time high price. So to go $30.06 times 90%, you'll get down to that $3 down here on that bottom right-hand corner. We see that it hit that point down there, $3.06 on right under the cracker in July 2003, just above 305, just on it there, and it never closed or opened below it, and so it had this beautiful run up after that. That's sort of what I was expecting, and you can see that move is 260.23%, and people don't like AMP. It can move when it does move, and that's a beautiful trend. Now, I was hoping, or I was expecting, I don't hope, but I was expecting that AMP might find some support around here and do exactly the same thing. That's why I was getting excited about it. It's just fallen out of bed, because what happens is when you get volatility in the market and all this sort of bad news, and all this happened was simply because AMP said it was going to be selling off some division it had, and then what happened is the big end of town pushed it really south. They started selling it. And that would trigger short sellers into the marketplace as well to push it even further down. Now they'll probably start buying this thing back, and it'll probably bounce back up again. So just looking at watching this at the moment and to see whether we'll find some support. But as I said just a few minutes ago, it is exceedingly rare to find a stock that will fall below 90% of its all-time high. And as I said, it's almost, I won't say it's rarer than hen's teeth, but it's getting close to that sort of point. So let's just move on. I want to compare this with another insurance company. This is QB, another big Australian insurance company, and you can see here quite a volatile share. And looking at the weekly chart now, we'll just go and have a quick look at that. You can see how this has been really bullish since June 2018. So for the last few months, it's been beautifully bullish, and you can make some really good money out of insurance companies. And there was a 27% rise, and it's just been a little bit bearish last week. It's really no reason to get too excited in terms of bearishness on this stock. I actually think it's looking a lot more bullish nowadays than more bearish. So I think this is just a short-term little pullback, and it should start to move up again. So if you like insurance companies, it looks completely different than AMP, and it is looking quite nice. Now here's a couple of stocks that we're looking at. Here's one of our actually diploma students actually put this on the Facebook, the YouTube page, and said, can you have a look at this? This is also looking like it's going to stop falling, and there's a lot of tools and rules around why we think it's going to stop falling. But if you look at this, there's a whole, even in our trading mentor course, that our cheap beginners course, you would learn why we think this is quite exciting. But right now, I think we're probably going to find some support here, or it is finding some support where it is. And I don't think there'd be too much in the next probably next 2 to 4 weeks, maybe 8 weeks. You'll get a nice little buy signal on this company. I'm really thinking it's going to find some support. But right now, I'd like to make sure there's confirmation of that low. Now, this is where the difference between confirmation and speculation. And there was a comment only today on the forum about having a Santa rally, just buy in and then sell out in January. I don't do that sort of stuff because that's speculation. Right now, this stock has had 1 week up and a bit of an indecisive week. It hasn't proven that's the low. So to say, yeah, let's just buy in because it's made a low and get in is speculation to me. I want to confirm that it's finished falling and it's about to start rising before I buy in. And this is why a lot of traders are really inconsistent in their results. And this is where it costs you so much money and costs you time, costs you compounding, costs you money, costs you in stress, whole range of things. And this is what I was saying earlier, is ignorance is quite expensive, but it's also quite stressful, being ignorant and not really understanding proper buy and sell rules, money management rules, those sorts of things. And I can honestly say, with the market being the way it has been the last couple of weeks, I haven't had one of our diploma students, not one, email worrying about their stocks and what they were doing, not one. And that's, to me, that's a sign that these people actually know what they're doing and they're not stressed. Actually, I'm getting the opposite. I'm actually getting them quite excited about wanting to buy some great stocks and make some really good trades to make some good money. So maybe you're one of those people getting really excited about the market right now, because I get really excited about it when the market is like that. I'm just going to compare this with the AMP with Telstra, and only for briefly, because you can see here how Telstra's been a bearish stock, sort of like AMP. They've just pretty much gone down ever since they floated on the market. And I think around the same time too, because here's November 1997, that came with Telstra hit the market, and this was 98. So it's pretty close if you're looking at the time frame, but if they look pretty similar, don't they? But you can see here $9.20 was Telstra's all-time high, and that was very early on, February 1999. And you can see here, if I just scroll this up, I'll squash it. You can see here that 90% of its all-time high is 92 cents. It's not got anywhere near that at this point in time. So that's what I'm saying, is it is quite rare, even for a stock that's been falling heavily like Telstra. That's its all-time low at 255 back in November 2010. Here it hit, if I get it on the right bar, 260. So within 5 cents of that. And it's moved up for 2 months. So if I just hit that there, so we can see it's gone up into August, and in the last 2 months it's been a bit sideways. It's not really bearish, but if we go to the weekly chart, we can see it's looking quite all right. And let me bring up that weekly chart, and it does look all right. I think, you know, if Telstra starts moving above that high of 341, I think that's a really nice stock to own for the long term, get some good dividends. But at this point in time, I'm just sitting back and waiting at this point in time, and waiting for that confirmation to get in. Now, you could have made some good money between that low of 260 to 341. If you look at this, trying to get in on that low, there's 30% move, but I'd rather give that away to know the stock is moving up and make more profit. Whereas too often people speculate that, hey, this stock's too cheap, I'll buy it now, and they end up watching it fall further, like AMP for that example. So as I said, that's it for me for this week. So remember to hit that subscribe button now, because next week I'll tell you how to get invited to that online forum where I'm going to be looking at stocks. I'll look at sectors, markets around the world. I'll look at stocks that you want to bring up live. It will be completely live for you, so you can be able to type questions, look at stocks, and ask questions while I'm looking at those stocks. So remember, hit that subscribe button right now while you're thinking of it, and next week I'll tell you what to do next. Good luck and take care. Have a great week and good trading. Bye-bye.
What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on Soundcloud and on our website. Now, they're jam-packed with valuable information which will help you elevate your trading. Now, if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.